As the name would suggest, the Chaikin Money Flow Indicator is meant to find the flow of money into the strongest portion of a trend, especially for a downtrend where there would be large red-bodied candles with little to no wick. The closer the closing price is to the low, along with higher volume, the greater the impact on lowering the value displayed by the Chaikin Money Flow Indicator, which in turn can help indicate a bearish move and its strength. Indecisive doji-type candles and reversal candles that don't lead to a reversal, along with low volume, are usually associated with less directional movement. The Chaikin Money Flow Indicator will usually begin to flatten upon the appearance of these conditions to help indicate indecision in the market. Now for the bullish side, it will be the reverse, with steep increases of the indicator driven mostly by large green-bodied candles with short wicks or no wicks at all, along with increased volume. Positive values can theoretically be more bullish, while negative values indicate greater bearish strength. However, it's still possible to have this indicator increasing in value to indicate bullish strength when values are under zero. Positive values are more of a secondary feature to confirm the development of a more sustainable uptrend, which is usually relatively large in scale. But as we'll see later on, crossing into positive and negative values can indicate various conditions depending on how close the indicator is to zero and how long it does or doesn't stay near zero. The only setting is the length, which will usually be at 20 by default, as it's a good balance between short and longer-term context. The maximum value that can be reached is 1, and the minimum value that can be reached is -1. But reaching these points would be extremely rare under real market conditions. Even values at plus and minus 0.25 could be considered strong. This tutorial examines this indicator with real chart examples from various time ranges to better understand the application of this indicator, along with its pros and cons. The general information learned from each example can remain applicable regardless of when you watch this or which particular charts you choose to apply the Chaikin Money Flow Indicator on. When the Chaikin Money Flow Indicator stays close to zero, especially between the 0.05 to -0.05 range, the market will often be at an indecisive stage. This could be less directional price movement with low, medium, or even high volatility. In this example, even before the indicator went back over zero, it was already on an incline before it briefly stalled near zero. This identifies some of the strongest portions of an uptrend with those specific features we discussed in the previous section. Since these are more specified conditions, they occur less often and usually only last for a short time. Normally, this will be an even shorter duration if the incline takes place when the indicator's values are still below zero. When Chaikin money flow values go back over zero, it doesn't necessarily indicate a bullish reversal or even confirm a bullish trend, especially if the indicator doesn't rapidly close over zero and keep rising, such as in this case where there is a sustained stall at zero. This bullish continuation is a similar move to when the uptrend initially began, as it shows near identical characteristics. It's a preferred characteristic to have a bullish continuation take place when the indicator's values are above zero. In this situation, attention focuses around the mid-35 level. The strength of the breakthrough below this lower boundary is confirmed with a sustained sharp decline of the Chaikin Money Flow Indicator before, during, and after it crosses below zero. Sustained bearish sentiment is indicated with the indicator remaining on a downward slope, which is of course on a flatter trajectory since larger red-bodied candles and increased red volume naturally become more sparse following the initial break lower. It is normal to see this kind of situation where the Chaikin Money Flow Indicator begins to incline up towards zero, but failure to rapidly surpass and maintain the incline over zero means even though the indicator technically went over zero, it was not a decisive bullish indication of a continuation higher. Then here's one drawback of the Chaikin Money Flow Indicator, which is it doesn't account for gaps. See, price technically went down, but the indicator went up because it only focuses on the price movement of the candle and not in between candles. So in this case, a value is drastically increased since the gap down candle was actually a large green-bodied candle with exceedingly high green volume. In this next scenario, price gaps up, but the indicator mostly remains flat to bearish. That's because the gap up candle is red with high red volume, but it's mainly a doji-type candle with less directional movement. However, there are a series of large red-bodied candles after it to drag the indicator lower. Due to this disregard of gaps taken, money flow is temporarily thrown off in comparison to how price is actually moving. 67.45 marks a key lower boundary during this shift to increasingly bearish sentiment. When price begins closing under this boundary, it's not a decisive break yet, until the Chaikin Money Flow Indicator begins a steep descent below zero, rather than just flattening and staying slightly above or below zero. When the chart inevitably begins to retrace back up and flatten, A bearish perspective would desire Chaikin money flow values to remain below zero to indicate persisting bearish sentiment for the developing downtrend. Eventually, this is not sustained even though red candles are still fairly consistent. It mostly has to do with how these candles are closing with longer upper wicks, which still drives price down but not as strongly as before. Overall, Chaikin money flow is best used in a shorter time range as illustrated by this rapid shift from bullish to neutral to bearish sentiment. That's because, as mentioned earlier, the specific conditions that have the most impact on this indicator usually take place over a relatively short time span. Then we end with a demonstration of a bullish trend sustained for a much longer period, which naturally leads to these characteristics of steeper increases in the Chaikin money flow indicator, periodically taking place with values over zero during these bullish continuations of mostly moderate strength, with indicator values peaking just above the 0.2 range, which can actually be quite a high value for this particular indicator. As usual, the break of a key lower boundary for a defined short-term range can be more decisively declared, with the Chaikin money flow indicator continuing a steeper decline after crossing below zero. Then the longer and the more consistently the indicator can remain below zero, the greater the chances of sustaining the downtrend. And naturally, we see the reverse on the way back up for a major uptrend, where the break over a key level is more decisively confirmed with positive Chaikin money flow indicator values that continue to rise. Indications of more suitable conditions for bullish continuations are present when values of the indicator consistently remain well above zero. Now, with the discrepancy and flaw of this indicator regarding gaps, it's more likely there could be short-term breaches under zero, even though price continues to rise, albeit on a shallower angle. Under such conditions, a bullish perspective would still desire the indicator to still remain consistently above zero. Otherwise, there could be an indication of increasing neutral to bearish sentiment. When there's a stable trend with consistent retracements or a more horizontal phase composed of more frequent swing points, we can still look for stronger and more decisive movements. But they'll normally be less clear and much shorter in duration compared to larger movements that have smaller or no retracements at all. Frequent short-term fluctuations in price can keep the indicator in a constant state of crossing below and above zero. Now here's a case where there's a gap down and the candle is red, leading to less discrepancies with the indicator compared to a green candle. As the gap rapidly gets filled, the indicator rises sharply. This abruptly ends even before price begins to move flatter into a range with more frequent swing points. This is because even though the last few candles are green, they are bearish with their longer upper wicks. And that causes the indicator to fall since closing prices are much lower than the highs of the session. And the volume has also begun to significantly decline. For more on indicators as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.